Now they're out of lockdown and most businesses, including the retail and hospitality industry, are approaching some sort of normality, it's worth looking forward to plan for the key financial dates during the rest of the year. My name's John Davis, and in this short video I'm going to talk you through them. So let's go through them in chronological order. The first one is the 1st of August 2020, and that's because from this date businesses need to contribute towards the cost of furloughed staff. You'll need to contribute to the employer's national insurance and the employer's pension for any furloughed staff. Now the government think this will only be about 5% of the total cost of their wages, but this will be a hit for many businesses to pay for staff who aren't actually doing any work at the moment. The next date is the 1st of October 2020. Now this is an important date because many UK companies have a 31st of December year end. And if your year end was the 31st December 2019, the payment date for your corporation tax is the 1st of October. Now the other most common tax year end in the UK is the 31st of March, and D-Day for companies with that year end will be the 1st of January 2021. In either case, it's worth planning ahead to make sure you can pay the corporation tax on the due date. The next date is the 1st of November. The furlough scheme fully ends on 31st October, so from the 1st of November you'll actually need to fully pay all of your staff and bring them back from furlough. Now, if you don't think there is a role for any of your staff going forwards, you will need to plan in advance of this date, so there'll be a notice period for any redundancies. And if that is the case, it's worth taking HR advice. The next date is the 7th of November, and this is due to VAT. Most UK companies have VAT quarters ending on the 31st of March, the 30th of June, 30th September and 31st December. Now everyone was allowed to defer any VAT due in April, May or June 2020. If you're one of these common VAT quarters, that meant the VAT quarter to the 31st of March. Now the next quarter to 30th of June was a smaller VAT payment for many businesses because income was down, because trade was down during lockdown, and for many businesses there was no trade at all because they were closed. But the 30th September VAT quarter for many businesses will be the first quarter when trade has resumed to something close to normality, and therefore will be quite a large VAT payment again. And that payment's due on the 7th of November, which is why it's one of our key dates. So it's worth planning once again to make sure you have enough cash to pay this. The next date is 31st of January 2021, and this all ties into income tax, but there's potential double whammy on this date. Firstly, the government allowed everyone to defer their 31st of July 2020 payment on account, but this becomes payable on the 31st of January 2021, so you need to budget for that. But secondly, the 31st of January 2021 is also the deadline date for the 5th of April 2020 tax return and tax payment. And because that tax will be on a year that mainly happened pre-coronavirus, it's quite likely you'll be paying tax on a higher rate of profits and dividends than you're earning now in a post-coronavirus world, which might make that tax bill even harder to pay. Then we come to the 31st of March 2021. As I mentioned earlier, the government allowed all businesses to defer any VAT due in April, May and June 2020. But it was just a deferral, and it becomes payable on the 31st of March 2021. The last of the dates we're going to look at is the 1st of May 2021. That will be the first anniversary of the launch of the CBILS, the Coronavirus Business Interruption Loan Scheme and the Bounce Back Loan Schemes. With both these loan schemes, there are no interest or capital repayments in the first 12 months, which means the payments start in May 2021. A lot of businesses have taken those out, which means there will be a cash impact on many businesses in May 2021. So it's worth putting all those dates into your diary. If your corporation tax and VAT dates are different, make a note of yours, and then please do start putting cash aside so you can make the payments. If you think you can't make in the tax payments, HMRC are being very reasonable right now over negotiating a time to pay arrangement. A time to pay arrangement is where they allow you either a slight delay in paying or usually to pay instalments of up to 6 months. But if you do want one of those arrangements, it makes a lot of sense to speak to them before the due date. They're more likely to agree to something before the tax is overdue and you're late. So let's say give them a ring and speak to them. You know, they are, let's say, being quite reasonable right now. And when you put this all together, it does really bring home the need to have a cash flow forecast for your business. That does let you plan all of your incomings and your outgoings, including these dates, so you're ready for all of them. If you need any help in preparing one of those, please do get in touch. Now, I hope you found that useful. If you'd like more updates on accounts, tax and business, please subscribe to our YouTube channel. Thanks for watching, and I hope to see you soon.